Hey guys, I'm going to do a quick video lesson here on using trend lines. Now, slightly different this one because I'm going to look at using trend lines from previous days and how they can influence price action today. However, in order for trend lines to work from one day to another day to another day, it's often quite important to actually have pre-market data turned off. I'm not sure how it works on other platforms. Certainly with TC2000, what you'll find is if you have a trend line coming from here to here, with this gap pre-market, when the market opens the following day, you've got another section here which is post-market, and then you'll have your pre-market, and the gap post and pre-market will throw the trend line off. Okay, it'll throw it off. And so what you see at 10:30 a.m. Tomorrow morning, the following morning, whatever that day is, it won't be the true reflection of the trend line, because the data that comes in from pre-market will completely change it. So what I do, and I just wanted to show you this because sadly I didn't do a video lesson on it on Thursday, which I should have done. This chart has like Friday's post market, but it hasn't got Thursday's, Wednesday's data in there. So what I tend to do is I have an additional tab on my TC2000, and let's put in a tab. Okay, so we go to tab, we go to chart, basic intraday setup. Okay, Apple. So what I do is we go to edit chart properties, and we go to post pre-market data, show post pre-market data, and we turn on to never for this particular tab. Okay, we turn that. Now, in doing that, what we get, I need to scroll this back a little bit to the right day, is here. So this was Wednesday, and this was Thursday. Now on Wednesday we had this trend line that I'd already drawn on Apple. Okay, going up here, you can see the trend line's obviously strong, it works, blah blah blah, it's a strong trend line. Now on Thursday, because we have this big gap of blue here, which represents post and pre-market, this trend line essentially, when it opened up, was going up above here. So it comes up and it goes up and it comes up above here. That's what the trend line looked like because of pre-market data. However, because I had this up on an options chart which doesn't have post and pre-market data on it, I was able to see this as it was, and I actually posted it in chat that day and said, just a little tip guys, make sure you have a chart available if you can with post and pre turned off. And I'm just going to show you why and how powerful these trend lines can be the following day and how they can get you into a good trade. So what we're going to do is we need to zoom in. So with post pre-market data turned off, you can have this on a little top chart somewhere, or you can just click between it to see if there's anything working. Here's our trend line from the previous day, and now we've got, you see how it comes down, the price actually tests this trend line here, and then we get a break of the trend line here for Apple. Okay, I know this was it also a price level? No, it wasn't really. So it wasn't a particularly heavy price level. There was a level on it from the previous day. I've just moved all my levels off, but there was a previous day level I had drawn in there that it also tagged. So it is so important to leave previous days levels on if you can from time to time, if you feel they were strong and important. Certainly in the case of a trend line, we've got this one coming up here, and this was perfect. This was a perfect opportunity to take a short on this trend line break from the previous day. And the point I'm making with this is, had pre-market data not been turned off on this particular chart on this day, the trend line was going up above these wicks here because of pre-market data had thrown it off. So all we had to go on really here was a break of the EMA 50, which is great. However, to see the trend line break actually gives us conviction. We get it before the 50 breaks, and then we get the $0.5 break there. A really good thing to do. I'm not sure what you can do on, if you haven't got TC2000. You'd have to have a separate chart, I imagine, blah blah, but you know your own charting software, and you know how to use it, I assume. So in the case of TC2000 users though, add a little tab to the top, turn off pre-market data, and yeah, use your trend lines and just look to see if a trend line you drew from the following day, or if a trend line you've got on from a previous day before that, even have a look just to see if it's still working, because often you will find that they do work for a day or two until the price action moves away from this price zone. I mean, if it's going up and down between 151 and 160, 151, 160, you will often find that these price areas, these trend lines will continue to work, but only if you have pre-market data, pre and post market data turned off. So you haven't got gaps and you haven't got price levels interacting and interfering with the lines. Okay, just a little tip for you there. I thought I would share that with you. Definitely strong. No, you can see once it breaks this, and I know a few of you took. I didn't take it actually. I think I was in a SPY trade and something else, but I know a few of you took this. It was a really good trade. Got instant resolution, and I think just having that trend line in is something that really just helps to solidify the trade. Whatever you may have had pre-market levels in there as well. If you have, and you happen to have another tab and you see this, then that should give you like extra conviction in the trade. Okay, and just quickly I'm going to do a quick review on the Nvda trade from Friday. I know Pat has just done a fantastic YouTube video which he put out yesterday, Sunday, which I recommend you all go and watch on the YouTube channel. Give a great big thumbs up, show some support. However, I'm just going to show my sort of take on the trade I took on it, and why I took it, and a few things I did during the trade. Okay, and obviously we knew from the pre-market plan of attack what the ideal was on the video. We were expecting some weakness due to the Intel earnings, and you know, obviously Pat talked about this stock market shock wave. I suggest if you don't understand that, you know, you watch this video and you sort of talk to us in chat about it. How obviously when let's say a semiconductor company like Intel that makes the processors has bad earnings, then other semiconductor companies such as Nvda, AMD, etc. will also have a sympathy play to it. And like Pat said in the video, it doesn't mean Nvda have done anything wrong, doesn't mean AMD done anything wrong. It just means that the semiconductor, in the case of Intel, with their misses on earnings, it means that the semiconductor sector as a whole will suffer a shockwave from a big company such as Intel releasing poor earnings. Same as Nvidia, same as AMD. If they released really poor earnings, then Intel would also suffer a reaction. So we were expecting a reaction to it, and we got this heavy sell straight out the close, this heavy sell. Now those of you that were in chat will know that Pat was saying watch the 9, watch the 9, watch the 9. Now the EMA 9 at the time was here, okay, 150-165 roughly. I had it marked up as. Of course it's moved now because it's moved throughout the day, so it was somewhere down there. Now we know, you should know if you've been around trick trades long enough, we know how strong the EMA 9 on the 1 minute chart is. You only need, on the daily chart is, you only need to look at the daily chart to see how Nvidia has really held this EMA 9. It likes to hold on to these levels. It's a very strong level on the daily chart, is the exponential moving average 9. So we were looking for a bounce, and we were looking for a bounce off this EMA 9, and we also know that institutions use it. So we know sometimes they sell it off, they'll sell something off out of the gate down to something like the EMA 9, where they will then pick up a hell of a lot more shares and push the price back up again. So at this point we were, you know, I was watching the volume profile, I was looking for and expecting a lot of volume to come in here, which did, and I picked this trade up at 142. My entry was like 142.04. Didn't take a. I know Pat took a starter down here. I was a little bit late to it actually. I was faffing around doing something. Anyway, let's zoom in, because obviously for me, the candlesticks at the bottom as well were a bit of a factor that made me have the confidence to take the trade. Okay, so I know they're quite wicky, but we still had a few dojis. You know, indecision candles. We got these buyer candles, essentially long bottom wicks, short at the top. Nice buyer's candle there. A big flush candle, but it still got bought up again. Okay, again a long bottom wick. So when I took the trade on, I think it was this candle right at the bottom of this candle here. Could have been 152.11. I'm pretty sure it was this one. So yeah, it's probably about 152.08, 152.9. My entry on that. Just because we got a candle over candle and a slight push down and then a pull up, so I took it straight away on that candle. Just nice conviction really in the trade. We got some, once we were in, there was never really any reason to be scared, to be fair. My risk zone, as I said in chat at the time, was always going to be off the low of those candles plus a bit of wiggle. I started in with a small position, and then I added a few into it. Wasn't a huge position for me, but it was nevertheless, it was a really good trade. I took some off when we failed the EMA 50. Okay, I took some off there, and then I took a few more off here when we failed to break it again, and then I had to go on the school run to pick up the children. So I set a stop for some more shares if it broke below VWAP, which it did. And then I set my final stop for my final quarter of shares below the low of the day. Okay, I thought I would give it some room. I think I set it just below 151, around 150, 90, 93, 94, something like that. So I thought I would give it a chance to come test the 151 and then take me out on the last quarter. Now, as you know, that never happened, and what resulted after was actually a magnificent trade. Wasn't expecting quite that much. From 152 entry, well, 152, let's say 152, let's say 152.14, up to, I held it right into the close, pretty well right into the close of day, 160s, somewhere in the 160, and that's like an 8, yeah. It was around about an 8-point trade, 7.5 to 8 point a share trade. That's fantastic, guys. I know it was only a small position. I actually forgot I had the position on, and it's only because we were in chat and Jerry mentioned about Nvda. I realized I'd still got a quarter of my Nvda on. I had no idea. I'd completely forgotten. So it was a really nice surprise to see that was on. So I obviously took my my 151 stop off at that point, and yeah, just sort of kept half an eye on it. Really pleased with that, but again, I would not have known, had it not been from the education I've received here from Pat, I wouldn't have known to pick this up here. I wouldn't have had conviction. I mean, it didn't hold the whole number. I used to think if something doesn't hold the whole number to the penny, it's failed. I had no idea about all this stuff until I started learning here, and I hope that you guys are picking up on this, that, you know, when something comes down and comes into a whole number like 152, you can't expect it to hold 152. These wicks are going to come down quite big. You're looking for the candle bodies. That's what we're looking for. Okay, ignore the wicks. They really mean nothing. The fact they get sucked up is the candle bodies we're looking for, and the candle bodies on the whole hold 152. And for me, that was a real clue as to what's going on. Not one single candle body, as you can see there, broke 152 on the close. As each candle closed, it closed above 152. That tells you it's got relative strength. Okay, ignore the wicks. After a drop like that, you're gonna get long wicks. Okay, you have to be able to work around this. If you know, it's the same as when you put stops in on stuff. If you're taking it at 152, if it's volatile at this time of day, you've got to give this thing a point. You've got to allow these candle wicks to shake you around a point. I mean, it's $154 stock, for God's sake. You've got to give them room. I see people getting stopped out so tight, you know, and then they sit there crying because they've just lost out on 8 points a share. And don't go in too huge. If you've got volatility like this, don't go in with your maximum size here. It's crazy. Plenty of opportunities to size up if you want to. Okay, you could have done it there, a higher low, if you want to. If you had to add into it, you've got opportunities. You've got opportunities here once it's over the VWAP. If you want to add in a few shares, it's up to you. Don't go all in on candlesticks like this. Okay, this first candle, you can't go all in there because you've got to be prepared for this. You don't add to your position really until you've got conviction. Until these lower wicks start to dry up and you get some sensible looking candles, then you can add to your position. But you still got to be prepared to risk off your lows. Okay, so don't go all in there. Okay, take your starter like Pat did. Take another nibble there if you need to, and wait for the candlesticks to become a little bit more, you know, less wicky. Certainly less wicky on the bottom. We don't mind a few top wicks at this point, but we want the bottom wicks to start to dry up. Okay, and then you can add another few shares in here, and then you can ride it. If you take off here, if you really want to, you could add a few in here. Not something I recommend you doing until you've been trading a good while and you've paid yourself and you understand about paying yourself and giving a bit away here, but that's fine. But yeah, you need to really study charts like this, guys. Study these candles here, study the groups of candles, and notice the bodies. This is what's important for me, is how the body of the candle finishes when the next candle starts. Where does it finish? Never once did the body of those candles close below 152. That's why I took my trade, as I say, just above 152, because I had conviction. This little wick didn't even come down to the low of this candle body. Okay, if we zoom in here, I know I do a lot of lessons on candles, but they tell me a lot. I trade a lot by price action. Okay, and price action is candlesticks. How are candlesticks reacting with one another? What are they doing? You know, long wicks, long wicks, long wicks, but this one was short and it never broke the bottom of that body. Okay, we look here, the two candle bodies never broke 152. Well, they didn't. I don't think they did. There you go. They held 152 to the penny. That one came down and that wick held 152. There's your conviction. There's your conviction. If you haven't taken a nibble, there's your conviction to take your trade. Okay, there's your low of day. Okay, you can put the rest together for yourselves from all the education that we give you here. I'm sure you know what you should be doing at this point and where you should be risking off. Another little thing I will point out is, obviously we talk a lot about the importance of leaving in your levels. Obviously the price comes up, it puts in a little high here. Okay, mark it up. Notice how the price holds that high there. Yeah, you've got your 9, and if you use it, you got your 20, but I'm not really bothered about that. I'm looking at levels. This is a level, 15573. Holds that level. Okay, it curls around that level. Okay, you've got other levels you could have marked up there. You will find price interacts with these levels. You've got one, I think it was there I marked up, yeah, so we move that, if we stick that there. This is when it's making new highs and failing. Okay, pushes highs, fails, you leave your level in. Look, it works there, it holds there, it holds there. So make sure you use your levels all the time, guys. Okay, as price moves up, move a level up. Okay, if you're well away from it, then you can take one off and you can move it up, obviously. But yeah, so anyway, that was a quick review of the Nvidia trade from Friday. That's it really, guys. Just, you know, obviously I can't thank Pat enough for the education that he's passed on to me. I wasn't taking trades like this a year and a half ago. I didn't even know trades like, I didn't even know this type of education existed. I had no idea about all this stuff. Every single thing I talk to you guys about, I have learned from Pat. So please understand that you are in the right place for the very, very best possible education here, and I hope that you use it wisely. I hope that you understand how good it is, and that you're watching all the video lessons that Pat puts out and really soaking that information up, especially when he starts talking about how the smart money trades, how the pros trade, the institutions trade. It's so important to be able to think like an institutional trader. Okay, for me, it was a bit of a game changer, to be honest, when I realized what the institutions do, how they sell stocks off using stock that they've got. They sell it off, they sell it down to a level, and then they pile in and they buy back 3-4 times more, and they push the, you know, it's legal in a way. It's like legal stock manipulation. It's nothing illegal about selling it off and rebuying it. If you've got the power to do it, and you've got the pockets to do it, and you've got the shares to do it, then why wouldn't you do it? When you understand that the professionals do that, then you're able to understand what's going on. I know this was different, this was a shockwave, but this happens all the time. How often, if you look at a bullish chart, you think how often when something's had a great day, if you look at the first 15 minutes, you'll often find it's sold off first. Sold off down to a level because it's been sold off down to a level, and then it's been picked up at the level, and then it's been pushed up and walked up for the rest of the day. It's called making money, guys, okay? And that's what the institutional traders do. They make money, and they know how to make money. So as long as we know how they do it and we understand what they're doing, there's no need to get caught up in this. There's no need to chase. There's no need to lose your ass here. We look at a level. We think, where are they going to sell it to? They're going to sell it to here. It's fine. Let's look at the candles. Yep, there's some buying going on. It's coming in. We jump in with the money. We jump in here with the professional money long, and then we ride it. We ride it as long as we can ride it. Okay, that's all I wanted to talk to you about. Yeah, hopefully you got something from that, and I will catch you in chat later on. Cheers, guys. Later.